All right, the bell's rung. Steve here. We need to talk about the action on the tape today, because this was not just another session. This was a day of pure defiance, and believe me, it has set the table for a very, very volatile end to the week. Let's get into it.
Look, I'm starting with this for a reason. It's the absolute truth. If you weren't glued to the screen today, you're basically trading a market that doesn't exist anymore. What we saw was a massive, and I mean massive, relief squeeze in equities. It was all sparked by a surprise miss on the producer price index that just caught the bears completely off guard. If you missed this playing out in real time, you've already lost the plot.
Okay, let's pull up the chart of the S&P 500. The SPX didn't just hold a line, it absolutely obliterated resistance. Just look at that move, an explosion to the upside. Closing at 69.67, it put significant daylight between the price and all the major moving averages. This, my friends, is exactly what a short squeeze looks like. All those sellers betting against the market, they were forced to buy back in, and that just threw gasoline on the fire.
Now check out the closing board, because this is where the story gets really interesting. It's all about the divergence. You see that monster green candle on the S&P, right? But then look over at Brent crude. Bam! Down over 4%. That is a major, major disconnect. Meanwhile, gold had a violent reversal, clawing its way back over $4,800. And Bitcoin? Well, Bitcoin is just sitting there, coiling, waiting to see which way the wind blows next.
And this right here, this chart of Brent, this is the other side of the coin. Oil was the big loser today, sliding all the way down to $95 a barrel. So the big question is why? Well, let me tell you, this drop wasn't random, it wasn't technical, it was 100% driven by rumors hitting the wire about a potential diplomatic off-ramp. So let's drill down into the two main catalysts that drove this entire market move. You had a surprise inflation print, and you had a flood of geopolitical rumors that sent oil into a tailspin. This is the engine room of what we saw today.
This was the number. 0.5%. This was the spark that lit the fuse this morning. That's the month-over-month producer price index. And in a market that was bracing for a much, much hotter number, well, this was like a shot of pure adrenaline for the bulls.
And this just shows you how completely wrong the consensus was. I mean, look at this. The street was screaming for a 1.2% print. We got 0.5. They were forecasting a 4.7% year-over-year number. We got 4.0 flat. This wasn't just a miss. It was a massive miss, and that gave the bulls the green light they've been waiting for. Why? Because softer inflation means the Fed has less reason to stay aggressive, and that, right there, is the music the market wants to dance to.
Okay, let's shift over to the geopolitical desk. The U.S. blockade of Iranian ports is live. That's a fact. But here's the kicker, the piece of news that absolutely tanked oil today, a post from President Trump claiming his administration got a call from Tehran saying they, quote, would like to make a deal very badly. You combine that with some fresh rumors of new talks, and that is what the market is latching onto right now. So this brings us to the market's two minds. It's the bull versus the bear. Because after a day like today, the market is completely split. You have two very different, very powerful narratives fighting for control, and this is the battleground.
The bulls, they're going to tell you they are in total control. They'll point to the fact that they've reclaimed every single major moving average. The soft PPI data is on their side, and they're thinking if a real deal gets done, the S&P is headed straight for 7,000. But the bears? Oh, they're calling BS. They say this was a rally built on pure hope. They'll remind you the blockade is still very much active, that the index is technically overextended, and if these talks fail, well, it could be a bloodbath.
Okay. Enough of the stories. Let's get down to brass tacks. In an environment this volatile, you need a plan. You need to know your levels cold. So here are the critical lines in the sand that I am watching right now.
All right, here's the bottom line. Your new pivot is 68.86 on the S&P. Above that number, the bulls own the football. Your get-out line, your danger zone, is 67.62. If we lose that level, you have to assume today was a giant bull trap. And for oil, you watch $95 on Brent. If that floor breaks, the war premium is officially gone.
Look, my advice here is simple, but it is absolutely vital. You've got to stay disciplined. Don't be the guy chasing these giant green candles. Respect the strength, yes, but this is not the time to be a hero. Use small position sizes, use tight stops, and do not trust the headlines until you see the ink dry on an actual deal.
And that leaves us with the ultimate question, doesn't it? The market is aggressively pricing in a diplomatic solution, a clean exit ramp from this conflict. So is that the smart money piling in, or is this the setup for one of the biggest, most painful bull traps we've seen all year? The answer, as always, will be written on the tape. Stay disciplined. The ledger is closed.